Okay, it's the 7th of October 2024. We are about 25 minutes to New York Open. We're going to do our analysis as usual and check if there are any possible areas that we can take trades from. So let's get straight to the charts. All right. Um, this is the daily time frame. So if you just look at the weekly, just to see what last week did. Uh, all last week has done is that it's created a doji between 2672 and 2632. Okay, if you go down to the daily, price has just ranged between 2672 and 2632. We have some sort of support at 2650, right in between those two support resistance levels at 2650, and price seems to be bouncing off 2650, right? Now, I don't really use weekly and daily time frames for my analysis because I'm a session trader. I look to capitalize on the volume that comes in within the first 2 to 3 hours of the New York Open. So the weekly time frame or the daily bias makes no sense to me. I don't really particularly try to guess what's going to happen on the weekly or daily. I trade the highest time frame that I look for zones are on the H4 time frame. Okay, so let's get straight to a trading chart. So before we proceed to draw our zones, these are the levels that we had on Friday. So if you watch Friday's stream, you'll see these exact same levels, right? That were marked. There was H4 supply there. There was H4 demand here. And you will see after NFP how price perfectly touched this level 2632 or 2633. We had marked these levels prior to the NY Open, and we were expecting price to come there. And price did come there, touched there, and pushed up about 360 pips. Then it came straight up to the H4 supply zone that we had drawn. Again, we had drawn this. I had drawn these zones prior to the NY Open, about 20 minutes prior to the NY Open. So if you go watch the first 45 minutes of Friday's stream, you will see these zones that were marked. Right? You'll see this light red box or this pink box marked within this dark red area to the left, and that was marked off this candle here. If you go to the M5, yeah, it was marked off this candle here, right? Just zoom in. We had marked it off this candle, this M5 candle, right? This was this we kind of predicted that this. I kind of predicted that this candle will hold selling volume. This candle right here, which is inside this dark red area, and that's exactly where price came to. So if you look left, it came exactly to that. Let me just zoom in here. Price came exactly to that and then dropped from there another 260 pips, right? That was later on in the NY session, and that too was a high liquidity zone. That's why we marked H4 supply here and high liquidity zone here. That's what price is. And then these support resistance levels, I had drawn them again during the NY session. I had said if price begins to close, if 5-minute or 15-minute candles begin to close above them, then it'll go to the next one. And if it starts closing below them on the way down, then it'll move to the next one, and so on and so forth. Okay, so that's kind of what happened on Friday, right? Price came to our demand level, moved to supply, came to supply, and then moved down all the way here, right? So now let's clean up the charts and let's start with a fresh chart and draw zones. Right. So all we have is just a wick basically on either side. That's what price has done. Um, yeah, gonna probably get rid of that and that. Okay. We've not come down further down. So, okay. So I'm going to leave these zones up here because price has not come there. Over entire all of last week, we didn't come there, right? We never came here all of last week. So I'm going to leave those zones. These zones are drawn from the previous week. So if you want to go see how these zones are drawn, you can go back not to last week's streams, but the week before that, and you can see them from last week. I'm going to leave them as they are because price hasn't come there yet. These ones at the bottom here, I'm going to leave them as well because these are from a couple of weeks ago. Price hasn't come here all of last week. I'm going to leave this zone as well because price just tapped it on Friday, but that entire zone is still is still there. We've just tapped about 20 pips, 25 pips into that zone. Okay. Um, so from where current price is standing, this entire area is about 400 pip zone. There are no zones in there that I'm going to. There are no zones there yet, but we're going to now start looking for zones. Okay. Um, let's start with demand. Okay, so this is the process that I follow every day, right? So there is a drop here, and there is a rally, a big rally up here. Okay, so there is demand there. Now, you could take this entire thing here as demand, provided that it's 23 pips, 5. No, we'll have to go look at the H1 time frame to look for a base there, right? We have a drop and we have a rally, but no real base in candle there. And we might need to look at the H1 time frame for that. Yeah, on the H1 time frame, there's a base, there's a drop, a base in candle, single base in candle, and a rally, right? Drop, one base, and rally. Yeah. Further down to the left, below this, there is this wick here. Again, I'll have to look down. There is a drop and a push up. I'll have to look down at the H1. Yeah, so there is a drop here and a rally there. So there is some sort of demand there. There's a drop and a rally. We'll have to go down to the M30 to see if there's nothing on the M30 either. So we're going to just keep it on the H1. Okay. So there's a drop. There is no basing candle, but there's a rally. Okay. So we're going to keep those two there. We're going to refine these later. I'm going to refine these zones later. Okay, that's what we have for demand, right? And then this demand zone price is already tapped into this demand zone. So this demand zone comes further down. Okay, that's all that is left of that demand zone. So this demand zone started up here, right? It was about 130 pip zone. Now there is about 70 or plus pips, about 70 to 75 pips left of that zone. Okay, so there's about 2/3 of that zone still left. Supply, there's just a wick there. There is a rally and a drop here. So, but price has come into it, has gone right through it. So I'm going to have to look at the H1 time frame again for this. See, on the H1, it's just a rally and then a big drop here, right? This is just a wick. So there's a rally and a drop, but obviously I can't draw my zone this big. That's too much of a zone, 170 pips draw. So yeah, so this would be the zone rally. There's a rally here, and then a base in candle and a drop. Okay, but I'll have to look at the M30 time frame to make that smaller. There, right? That would be the zone. So again, how I did that was on the H1, on the H4, there is resistance there, or there is a push down there, but because it's a wick, it's not clear exactly what the zone looks like. So I went down to the H1, and H1, this looks like a rally, a base in candle, and a drop. Okay, rally, base, single base in candle and a drop, but that's too wide. That's 170 pips. So we go down to the M30 to refine that a little bit, and that's what we have. Okay, that's what I have: a rally, a base, and a drop, and prices already come there, which is great. Okay, now further to the left on the H4, this was a supply zone right here. This area is a mess. This was a supply zone right here, but it's come very deep into it, right? So that's all that's left of that supply, right? So this rally, there were 3 basin candles and a drop. Okay, I hope that's clear. There was a rally, 3 basin candles and a drop, but prices come deep into it, so that's all that's left of that supply. Further to the left up, these zones are not touched yet, so I'm going to leave them as they are. Yeah, so this was a rally. There were 5 basin candles here, 1, 2, 3, 4, 5, and a drop from there to there, 140 pip, but price came deep in, so that's all that's left from that zone. And then we had this supply here. When price came up, it created a rally, 3 basin candles, and a drop, and that's all left of that supply because price came in on Friday, came deep in. Okay, right. Now let's just move these to the right. Today is the 7th. Now these light red boxes within these dark red rectangles are specific candles that price could come to. If you want to see how they're drawn, you can look at previous week's supply, but we're going to do them here again. I'm going to do it right here. I'm going to do it now here again. Okay. Okay. So on the H1, okay, this one is high, 70, 20, 12, 8, 12. Okay. 70, 20. 311. That's the top of that rectangle. If you go down now to the H4, it should look right. Yeah. Okay. So that's the closest supply that we have right here. Okay. And then in terms of demand, we have this 327 and the low is 976. 327, 976. Okay. And then we have this one open 885 and low is 205. 85. Okay. Right. Okay, these zones are from a couple of weeks ago. How I drew them, you can see them in videos not from last week, from the week before last. If you pick probably previous, not previous week's Monday, Tuesday, or the week before, not previous week's Monday, Tuesday, but the week before that, on Monday, Tuesday, Wednesday, you'll see these zones. I'm not going to redraw them right now just to save time, because also I don't believe price is going to come all the way down 400 pips today. Okay, but I'm going to leave them there because they're on my chart, and that they are marked as a high liquidity zone. Okay, so that's the closest one to current price. That's the H4 demand zone that we have. Um, okay, yeah, I'll just extend this also to the right. Okay, now out of these zones, we're going to identify which ones are high liquidity zones and which ones are not. The ones above are all already are, because prices never come there, and we mark them because they've taken out opposing zones. So I'm not going to remark them, but we're going to look at this supply zone to see if it has taken out a demand zone on its way down. So we'll have to go down to the H1 because on the H4 it's not visible. It's just two wicks, a wick going up and a wick coming down. So if you go down on the H1, again it's not visible. It's not taken out this. Probably look at the M30, and this move down took out this, right? This move down took out this demand. So there was a rally, two basin candles and a rally, and this push down went straight through that, right? So this candle came down, the next candle closed, and the next one broke down. So three candles, consecutive candles pushed down and broke this demand level here. So I'm going to mark it as a high liquidity zone. Okay, that's a high liquidity zone. Okay, the one above this zone right here, I'm not going to mark that as a high liquidity zone because prices come deep into it, right? I mean, the supply, this was where the supply zone was. It was here. As I said, rally, three basin candles and a drop. Price touched it here, touched it here, touched it here, touched it here, and touched it here. So this zone is consumed, right? So I'm no longer going to mark this area as a high liquidity zone. Okay. So let's take a look at demand. This is the first demand zone. We're going to see if it took out something on the left. There is some sort of demand there. We'll have to go down to the H1 time frame. Yeah, so there is a rally, and there are four basin candles, 1, 2, 3, 4, and then a drop. Okay, that's the leg in or the rally, and then there are 1, 2, 3, 4, these four basin candles, and the leg out or the drop, rally, base, drop, right? That is a supply zone on the H1, and this move up took that out, right? There's also smaller supply zone here, a drop, three basin candles and a drop, and this move out took out that. So this is a high liquidity zone. Okay, now this one here, again it's not clear on the H4, so again we're going to go down to the H1 and see if this took out anything on the, yes it did. So this drop and this rally took out this supply. So there was a drop, 1, 2, 3, 4, 5 basin candles and a drop, base, drop, okay, or a leg in, base and leg out. This big move down was the NFP move, and that was where price came down, and that move down, this base was taken out by this move up, right? So this too is a high liquidity zone. It'll be clear on the M30, but we don't need to go to the M30, but it's very clear on the M30. You can see that that's an entire thing is a base. You have a drop, and all of these are basin candles, and then two same color candles coming down. That's a drop, and this move up from here took that base out, right? That's how you identify a high liquidity zone. Okay, so for that's what we have for today. Perfect. Okay, let's get rid of these two lines also. Okay, and on the daily time frame, there is nothing. There is no new daily support. Just last 3 days, the previous 3 days, Wednesday, Thursday, Friday, they were just dojis. Didn't do anything last week, right? We are just price is still just ranging between inside this 400 pip range, right? Between 2672 and 2632. Okay, so let me just post this on the group. We got about 5 minutes to NY open. Just okay. Right. So I just posted the execution and analysis possible execution for today if you're using the buy and sell signals of the indicator. But what I'm showing here is to trade. If you do not have the indicator, how you can still trade. If you do not have the buy or sell signals of this indicator, how you can still take a trade. Okay. Um, yeah. Okay. Um, yeah, it's NY open. So let's just look at news and see what we have today. So this is the week. This is how the week looks. We got no news on Monday and Friday, on Monday and Tuesday. This week is a volatile news week starting Wednesday, right? Because we've got volume should start coming in probably Wednesday because we've got CPI and PPI this week, right? They're both fairly big news events. CPI is fairly big, just like NFP. It kind of has the same volume of NFP, right? So that's on Thursday, and then on Friday we have PPI, right? So volumes should start coming in on Wednesday, Thursday, or Friday, right? On Monday and Tuesday, there are no news events, so I'm not expecting any surprises on Monday and Tuesday. Today is the first day of the week. I generally don't like taking trades today, but we're going to see if you have any opportunities, if price does come to a high liquidity zones, and if you have an opportunity there. Okay, but it's Monday, so we're not trying to um, do anything crazy today. All right. Now, um, let's quickly, before we start looking at this liquidity candle, which is from a high liquidity zone, the candle is inside a high liquidity zone, and this candle, which is a very interesting candle, this candle right here. Before I do that, now that candle is a 120 pip candle. Obviously, I'm not going to take a trade there with 120 pip stop loss. But before we do that, I just want to look at the what price has done so far right until the open of NY, until the open of NY session, what it's done in the Asian and the London. Okay, so this is the market open right here. I follow this, I do this process every day so that this might be helpful to somebody, you know. So we just want, what we're trying to do is trying to understand what price has done, like the story of price. What has it done today? Okay, so that's the market open right there. Then we've had, that's the Asian high there. Okay, so I'm just going to put a line there. Okay, that's the Asian high. Okay, and then around here, uh, yeah, this low is 388. Okay, so that's the Asian low, right? That's the Asian low, and then we have the London low. That's the London low. Then we have here the London high. Okay, fairly simple, right? So this is on the 15-minute time frame. Okay, so this is where the market opened right here. We made an Asian high here. This is the Asian high. Price came down, came to retest that high, pushed down, created the Asian low, pushed back up, came to retest the low, pushed back up, broke through the Asian low, and created the London low, right? Closed back inside and above the Asian low, right? Above that Asian low, closed back, pushed all the way up. Once it closed back in, or above the Asian low, it pushed back straight to the Asian high, right? And push further, creating the London high. Pushed down or pulled back, closed above the London high, and now we are ranging above the London high, right? That's what's happened. So this is the pre-NY, the pre-New York session range, just above the London high, okay? That's the London high. That's what price has done. Now, what I'd like to see is price push further in and then kind of close below the London high and then continue down to the London low or to this demand zone, right? That's what I would like to see. That's the anticipation, right? Now, I don't know if that's going to happen or not, but that's what I would like to see happen. Um, okay, so we're going to leave those lines for a bit now. For those who want to look at the charts and kind of understand them, we'll leave those lines for the next 15 minutes. And we're going to now take a look at, because price has tapped this high liquidity supply zone. So this high liquidity supply zone is based off the H1. There's H1 supply zone there, rally and a base in candle and a drop. But we've kind of refined it further on the M30 because that's the single base in candle, and then the three continuous bearish candles from that zone, right? Price has already tapped it, okay? So we're going to take a closer look at this. Is a liquidity wick, right? This is a massive 117 pip liquidity wick. We're going to look deeper into that area because obviously that is too much of too big of a zone to try to trade with the stop loss above it, right? I'm not going to take a trade with 120 pip stop loss. So on the 15-minute, it still is a one big candle. That candle is 128 pips. We're going to go down to the 5-minute time frame. Okay, so in the 5-minute time frame, this is the candle. This is the big candle that stands out, right? This is the big candle that stands out. Very clear. So we're going to just mark that candle. So this is what I do every day. This is the process. Okay. The high 583013. 583013. Okay. So that now is a more manageable zone. It's a 55 pip, 56, 57 pip zone. It's more manageable than 120 pip, right? We've come down to less than half. So 15 minute. Okay. Let's look at the 1 minute. Just want to see what the 1 minute time frame looks like. So in the 1 minute is this candle, right? And that's even more. That's just a 36 pip. Okay. Um, okay. I'm going to mark this supply zone, right? This drop, base, drop inside this. So the closest, I hope you guys can see it, drop, 3 basing candles and a drop. This is on the 1 minute time frame. So if price comes there, I'm going to look to take a trade. So okay. Yeah. Price comes there. We're about 30 pips away. Then we have this one here, but I'm not really keen on that. This one right here. Five, 6, 5, 5. Okay. So that zone is about 45 pips. And if I do take a trade here, my stop loss will be above this candle, about 38, 35, about 35, 36 pips, right? So let's see if price gets there. Let's see if price gets there. Yeah. Then there's that candle there as well. Zero 15463. 015463. Okay. This high is 583. Okay. It's better. Six 665. 4.665. Okay. So what I've done is basically I've taken, so if price comes to this zone, this is the area that I want to take a trade. Here, 2661.87, and then this daily SR level of 2662.74, and that level is marked because of this, right? Here, There is daily resistance there, right, at that candle, 2662.74. That's the reason of that, for that white dotted line. So if price gets up there, then yeah, if we get, so if it gets up here, I'm looking to take a trade, or here, right? And my stop loss will be about 35 pips. And if price breaks through this zone and gets up here, then this is where I'm looking to take a trade at 2666.65, or even here, 2665.65. Okay. Right. Price needs to come to this area. Sorry, give me a second. Yeah. So that's the minimum area that I'm willing to wait, that I'm gonna have to wait, right, for price to come to this candle. I'm not willing to take a trade anywhere below this, because if I take a trade anywhere below this, right, anywhere here below this light red box, it's going to be a very big stop loss. So that's the candle that I have to wait. I'm going to wait, right, for price to come to. If it doesn't come there, if it decides to touch this dark red area and turn and push down, so be it. I'm not going to have a trade, right? I'm not going to have a sell trade. But if it does come deeper here into this candle, and then preferably to this supply 1 minute supply zone or this daily SR level, that's where I'm willing to take a trade. Okay, that's let's say about 13, 37, 38 pips. That's manageable. Okay, yeah, that's manageable. So price has to come there. If it does come, if it doesn't come to this candle, I'm not taking a trade. That's in this zone. That's in this light red zone. Or if you break through this and it comes to this area, then that's the candle that I want to wait for price to come to take a trade. Okay, so that's on the 5 minute. There's a rally and two basin candles on a drop. On the 5 minute, that's a supply zone. And then because that's a big candle, I have to go down to the 1 minute time frame to look for supply. So there is a drop. There are three basin candles and a drop there. That's fine. There's another supply zone here as well. Drop base right at the beginning of that um, light red box. There's another small supply zone here. Drop base and a drop. But I want to wait further up here, right? Because this is too much of a stop loss. I want price to come in further. And then if you break this zone, this light red box, we're coming to the candle above, the 5 minute candle, liquidity candle above. So there are two liquidity candles in that 15 minute candle, this one and this one, right? This is a liquidity wick and this candle, right? These two candles stand out in this entire zone. These are the two candles that stand out, right? So I'm going to wait at this candle. So for a trade, and at this, if it comes further up, then at this candle. Okay, so the idea is to sell today if price comes to this area, to sell today from this light red box or this light red box. That's the idea. So we are already reacting to the dark red area. Price is already pushing down. It's pushed down about 30 pips. If you look on the M15, yeah, we've touched this dark red area and pushed down. We haven't come to this light red area yet, but we have a 15-minute candle close already. So I have, yeah, two highs, previous highs taken out. Price has come down. It might be that I don't get a trade today, and that's absolutely fine. It's a Monday, so I'm not looking for to particularly take a trade today, and I'm not going to be here for too long. Just maybe uh, about 30 minutes after NYSE. So that's, yeah, maybe another hour and a half, 1.5 hours. I'm going to be here. Okay, so two highs are taken out, and price did touch, so we should come down here, right? We should come down to 2656. Now don't be surprised the way I draw these fibs. They're not your default or standard fib. But if you look at if you watch maybe about 5 of my videos, previous videos, you'll see exactly how I draw them. If you go back, watch the first video or the first few videos, you'll see exactly how this fib is calculated as well. So the way I mean, just to summarize, if two previous highs break from a high liquidity zone, so this candle broke this high, and this candle broke this high. Now it can't be too further back. It's got to be during the New York session, the New York Open, or just before. So which means in the pre-NY session, right? So pre-NY session is about 45 minutes before the NY Open. So that's fine. Up to 45 minutes before the NY Open, I do check candles. Okay. So this candle broke this high. This candle broke this high, and then I draw the fib on this candle, and the reason for that is because this candle has to have touched a high liquidity zone. Otherwise, no. Okay, so it did break, and then the next candle respects this high. It's not supposed to break the high, so that's a possible place that you can take a trade from. Stop loss just above that candle, about 7-8 pips. Anticipate price to come down here. All right, to 2654. That's where price should come down, 2654. So that's about a 7 RR trade if you take. But I was not willing to take that. I want to wait. It's just the beginning of the week. I don't want to chase trades right now. I want to wait, see if price comes here. I'll take a trade. But if it doesn't, then I don't get a trade. But if this happened probably on a Tuesday or Wednesday, I would have taken this trade, right? But it's just the beginning of the week. As I said, price will come down here, right? So this 966 and 691. 966. Okay, yeah, that's where it's coming to. It'll come right here, 2654.16. It'll come there. So that's the opportunity for a 7 RR trade once it comes there, right? So you got about a 7 pip stop loss and about a 48 pip reward. Yeah, so we've broken that, as I said, and we're coming further down. So that was the NY trade, possible trade to take in the NY session. That was the trade. Price did not come further into the light area. It came to this candle. As I said, this is the liquidity candle. All right, this is the liquidity candle, M15 liquidity candle, but that candle is too big for me to take a trade from. But here, this is more manageable. Two highs are broken. You draw the fib based on this candle because The previous two candles broke two highs. This broke this high, this broke this high, and then this candle, this is the candle, the entry candle. Soon as it touches 2658.97 or 2658.28, you sell and you anticipate price to come down, and then it's heading back. Once it breaks this, it's possibly coming down to 2650. That's the next stop, 2650. Okay. Yeah, so that was possibly the NY trade. And I don't think we're coming back up again now to get in on a trade. We might possibly come down. Okay, we're just going to leave that where it is. Now let's get rid of these. These are, as I explained, these are the Asian high, the Asian low, the London low, and the London high. So now if you close below the London high, we should be possibly coming down back to the London low. We should be coming first to this H4 demand and then further down to the London low and then next to this demand zone. That's the possible trajectory for price. Okay. I'm going to get rid of these. Okay. Right. Now, let's do the same thing here. Right. Look for a liquidity candle. This is a high liquidity zone. I marked it as because it took out the supply on the left, but that is yeah, that's kind of H1 supply that it took out. On the 30-minute, that candle there. So this candle here. Three two seven 114. Sorry. Okay, let's inspect that candle a little closely. On the 15-minute, it's that candle. This is the candle, okay? This candle right here, not these two. This is the candle that has volume in it. So let's look at that candle on the 5-minute. It's got, no, it doesn't look great. There's no bottom wick here, no bottom wick here. Doesn't look great. I'm not really keen on this. I'm going to leave that light green area, but I'm not very keen on this candle taking any buys here. Let's come further down to the next high liquidity zone, which is here, right? This is the next darker green area. So let's look there for a, that's a big liquidity wick, right? That's a 65, 66 pip wick. So I'm going to just mark that wick there. Going to mark that wick there. Go down to the 5-minute. Yeah, that's a better candle, right? That's a better candle. That's a. Let's go down to, yeah. Let's mark that candle close. 883 205. 883 205. So let's just go down to the 1-minute and look at that. Okay, on the 1-minute is these two candles. So I'm going to bring it up to this low, 3368, 3.68. Okay, those two candles, that's about a 40, 50 pip zone, okay? On the 5-minute, yeah. Okay, so if price gets here, it'll be interesting to see an opportunity. Yeah, here, right here, this open 877 close 877 there. The next one down here 381. Okay, right. So there's on the 5-minute there is a drop base, single basin candle rally. So that's why I put that there. And then on the 1-minute there is a demand zone further down, right? And that also 2633, I think 0.5 or 0.6 is daily SR, and then there's weekly support there as well, right? So that's a good area if price comes to take a trade, or even further up here. So yeah, we are dropping, we're not coming back up. That was the trade there. Price dropped 100 pips. Okay, so here I'm not really maybe really interested in taking a trade here because I don't like that this candle here doesn't have a bottom wick, right? So if I look at even the 30-minute, it doesn't have much of a bottom wick. 15-minute the same. 5-minute also the same, no bottom wick. And then on the 1-minute also should be kind of the same. Yeah, there is no bottom wick here. There's no bottom wick here. There's no bottom wick here. There's no bottom wick here. So price could easily come straight down through this, right? I don't want to take a trade there. I'll wait further down. Now, let's just draw some support resistance levels like we usually do, just to understand where price is going, okay? Yeah, so we're coming straight down. We've closed below 2650. We're coming further down. We're coming right here. We're coming to this demand zone right here, right? That was a nice clean drop. We're coming all the way another 50, 60 pips. We're coming down here. Once we come here, we should come down further here as well. So that's probably another 100 pip drop left on this trade. I don't chase price, so I don't care what price does. I don't chase price. For me, the trade is up here in this dark red area. Um, Right. Nine. Okay, and then we have this one, last one. 436. Okay, so these are the SR levels that we have, right? These are support levels so far. Now price is close below this. So it came down obviously this. Now once we close a 5-minute candle closes below this, then we're coming here. Then once we close this, we're coming through this green area to this. Okay. And the next one is there, but I'm not going to draw that because that's already a demand zone, right? I draw these support resistance levels in between supply demand. I don't draw them inside supply demand because it makes no sense. Because when price comes here, you're either looking to take a sell trade or you're looking to close on a buy trade, right? That's what you're doing at a supply zone. And the opposite for demand. When price comes into a demand zone, you're either looking to buy or you're looking to close a previous sell trade that you have when you come to this area, at least close partial positions or close full. Okay, so but in between them, it's important to understand what price is doing in between them. That's the purpose of these support resistant levels, right, on the 15-minute. But if you look at the 30-minute, they are valid on the 30-minute. See, perfectly valid on the 30-minute. If you go down, if you go up to the 1 hour, they're valid on the 1 hour too. Perfectly valid on the 1 hour as well, right? So if you draw them correctly, that's why I spend time to get the numbers right on it, uh, because when you do draw them correctly, you will see them work on at least 3 consecutive time frames. So the H1 it works, M30, M5. Even if you go down to the M5, it'll work, right? So the M5 candle close below this support, and the next candle continued down to this one. This M5 candle closed below this support, and the next one will continue down here. Once we close below, M5 candle closes below this, then the next one will continue down here, or the next M5 or the M15 will continue down here. Okay, that's how they work. So as I've said, that's the purpose of these streams, is to kind of show how to draw high liquidity zones, then identify, show how to draw supply demand zones, right? Then identify high liquidity zones, then show you guys how to draw support resistant levels, SR levels, and then how to manage risk when we're getting on a trade. That's the purpose of this, right? So this was a nice clean drop. Now if this had happened on a Tuesday or a Wednesday, I would have taken this trade. It's a Monday, so I was not kind of rushing to take a trade here because I was kind of anticipating price to come at least into this light red area to take a trade. Now this light red area is still valid. Price can come into it today, later on today, or even tomorrow, right? At any of the sessions, the Asian, the London, any of the sessions, price can come into this zone and you can get a trade from there. But today, during the NY Open, it didn't. NY just pushed up and then dropped straight 150 pips, right, from this dark red area. Now we're coming here, where we should come once a 5-minute candle closes below this. Yeah, just a 3 minutes for this candle to close. We should come to this screen. Yeah, we are already coming down. There's hardly any space between this support and this, just 10 pips, 10, 11 pips. So we should come down to this demand zone now. And then once the candle closes below this, we should continue down to this level. Now when we come here is when I'm going to be interested in looking for a trade. Um, yeah, this candle, this liquidity candle is where I'm going to be interested in looking for a trade. We are coming straight down. Yeah, so we're about 38, 40 pips away from this area. We've touched the green area, right? So that was a clean drop, 160, 64 pip drop straight down from that dark area to this, from this high liquidity zone that we had marked at the beginning of the session to this high liquidity zone. Now in this high liquidity zone, I'm not really keen on taking a trade, even though we might get a bit of a pullback because price, I don't see a bottom wick here, and price should come through it because it should break this low, this candle low. We should break this candle low, right? We're already quite deep in. We should break this candle low. Once we break this candle low, we're coming straight down here. That's where I'm interested in looking for a buy trade. Yeah. So if you were trading the signals of the indicator, then as per the trade plan that I've shared for those who own the indicator, this is a signal candle. So I'll just show you right here. Just go switch this on, signals. There you go, right? That's a signal candle right there. That one right there. So you put your stop loss above that candle, take a trade as price breaks the low, and then that's about a 25 pip stop loss, and you're coming straight down to demand. Okay, so that's a fairly decent RR, 25 pips to about 134 pip drop. Okay, 134 pips to 25 pips. So if you're trading the trade plan, or if you're trading the buy sell signals of the indicator, then you would exactly know where to place your stop loss, where to place your entries. They're all mentioned. The indicator tells you where the TP levels are, where the stop loss goes, where the entry levels are, tells you everything, right? And it tells you to trade from supply zones and from demand zones. So for example here, if I just quickly show you guys what I posted in the group. So that's the analysis for today. So previous weekly and daily closed above 2650. Daily candles are still ranging between 2672 and 2632. Price is currently testing H4 supply. That's what the price was doing at that time before the NY open. Then there's daily SR at 266250, 2672. That's above current price, right? So those levels are above current price. Price didn't get right there. And then for sells, I said, in terms of execution for sells, I'll either wait for a sell signal from supply, right? And that's exactly what happened. A sell signal from supply, right? A sell signal from supply. So this is a sell signal. Okay, you can see this is a sell signal from supply, right? You can take that trade coming down. Okay. We are reacting to that. We are reacting to that. I'm going to wait for the 15-minute candle to close. I'm not going to do anything right now, but we are reacting to this light green area that we had marked. We came right to the bottom of it, right to the bottom, but we are reacting to it. So inside that, you would have found a M5 zone, which is that, right? Yeah, that's the one price is reacting to. Just very small stop loss, 6 pips, 7 pips stop loss, and price is pushing up 29 pips. That could have been a possible trade. Just show you guys again. That's the drop base rally, right? Price tried to come back into it, couldn't, went straight up. Okay, so the close of that is 172, 172, and price is pushing up from it. We pushed up about 34 pips, right? So very tight stop loss. Stop loss would have been about 6 pips. And again, the reason I'm not taking these trades, if they were on a Tuesday or Wednesday, I would have taken it. Today's a Monday, so I'm not really kind of keen on you know, taking trades on Mondays. But I'm going to wait for this M15 candle to close. Let's get rid of that. Wait for this M15 candle to close, which is in a couple of minutes from now. And if it does close with a big wick, then let's see. Let's draw the fib and see if there is a possible opportunity. If it comes straight down, then obviously not. But there was a supply zone there to take a trade, and price did move up. Yeah, that was the trade. But we are reacting to this resistance. You can see prices, this resistance right here is holding price down. Now, when you see something like that, even if I did get in a buy, I would have closed the trade. Because once you see resistance pushing price down, right? This is high volume hours. So on the M5 or the M1, if you see this, there's no need to hold the trade because price is coming down like it did. See, it rejected the resistance. That is why it's so important to draw these resistance, support resistance levels correctly. Take time, take your time, don't rush it, practice, get them right. When you get them right, you'll see a perfect touch into it and a rejection or a close above it. If you see a close above, then price is going to the next one. But we don't have a close above. Price rejected on the M1 and it's close below and price is coming down, right? We're coming further down. We should break this low and continue to the next one. Okay, 30 seconds for this candle to close. Doesn't seem like it's going to create any liquidity, like a liquidity wick. Maybe, let's see. Yeah, it's just closing a bearish candle. So I'm not going to do anything. I'm not going to try to take any buys here. If it closes this as a bearish candle here, this M5 candle is important. If it closes up here, back in support, in resistance, then maybe look for a pullback to go up. But we're closing below resistance, right? We're closing below resistance. Yeah, and we're closing a doji. And we're closing below resistance. Okay, so I'm not going to, the M15, yeah, we've closed below resistance. I'm not going to look to take any buys right here, even though if price decides to go up further, let it do so. That's yeah, no. Stop loss below here, 18 pips to go up here. No, maybe not. No, coming down, coming down. 139, 961, 139. Let's see if for 5-minute bull candle closes above this demand again, then maybe I'll look for a little bit of pullback to take a trade. So it's got about 3.5 minutes. Because right now price is pushing down. M1 rejected that area, we're pushing down. Price has to respect this low. If it doesn't if it breaks this low, then that's it. There is no, I'm not going to be looking for a trade in this green area at all. But it's got to respect this low to continue high, and we're coming down. So there has to be a 1 minute rejection or a 5 minute rejection from this area. So in the first 5 minutes, if you break this, then obviously there is no buying here. Yeah, so we're coming down. Yeah, we broke the low. So there is no trade in this green area. Okay, we closed below, we broke this area, we broke the low here, we're coming down to this green area. Now let's get rid of that. Let's get rid of this. There's a small pullback here of about 30 pips, and that's it. Yeah, this one was about 37 pips, and that's it. Now we're coming down here. So this is the next high liquidity zone that I'm interested in, right? Taking a trade from. This is done. Price has broken this low. I said this before several times. On the M30, there was no low on this candle. There is no bottom wick. On the M15, there is no bottom wick. On the M5, there is no bottom wick. On the M1, there was no bottom wick. On the M1, if you go down to the M1, you'll see that there was no bottom wick. There is no bottom wick right here. There is no bottom wick, right? There is no bottom wick here. So price came right through that because there is no bottom wick. We broke right through, okay? And we're still pushing down. We rejected this. This is a clear rejection, right? To push down. Now you can take these trades. You can take these trades, right? There's nothing wrong in taking trades. For scalpers, you see a clear. If you learn to draw your M15 support resistance levels correctly, these are good trades to take, right? For scalpers. If you're a scalper and you take several trades during a session, this is an absolute correct trade to take. If rejected, we have a lot of momentum, bearish momentum, and price tested resistance close below it. Stop loss goes above 10, 12 pip stop loss, and you take whatever 20 pips, 30 pips, 40 pips. Price should come down here. So that is a fairly decent trade to take, a 55 pip drop on a 10 pip stop loss, right? That's a very good trade to take if you're a scalper. I don't take trades like that, but they are correct trades to take. Those ones are absolutely correct trades to take, but I don't take them. I want to wait at the extremes for trades, for opportunities. Here for a buy, here for a sell. Coming down. So NY session is basically pushed down. That's what has happened. Price is pushed down almost 200 pips. We've just had a clean push down. It's a Monday and we had a very nice clean push down. Right? Now, bear in mind price is coming very close to this support level. And what did it do previously? Pushed up, pushed up, pushed up. Right? It's a Monday. So we could have that again. We could see that again. Price comes to this area, 2637, 2636, push up again. Just like it did here. Push 300 pips. So 2637, 2636. That's exactly where the zone is, right? 2638, 2637. Should break and come down here. The zone should break now. I'm going to place a pending order here. This open is 877. This close is 80. Place a pending order there. 877. And stop loss below this candle for now. But we're going to manage risk if we come there. If we get deeper in, low 3205. 45, 3205. 95, 8575. Okay, gonna have a pending order there. And if price does come deeper in here, could have another pending order there. Open 622. Okay, so got two pending orders there. One at the top, one here at the base. Okay, and I just want to check that base a little bit more. Yeah, that's fine. And here 263301. Close 381. 381. Okay, I've got three very small orders placed in that range, right? All have the same stop loss just below that candle, M5 candle, that liquidity candle right there. Price hasn't come to that candle yet. It's coming there for the first time. If you look on the 15-minute, there is a wick there. Let's see what price does. So we broke through this. We broke through this green area. Just need to come to that wick. So this candle opened at 1545. Let's go down to the M1. 1545 there. So in the first 5 minutes it broke the low, right? So I wouldn't have taken a trade there anyway. I want to wait here now. Okay, so this, we can get rid of that and let this candle close below. I want this candle, 15-minute candle, to close below this green area for me to delete this. Okay, so this is exactly as we anticipated. Price touched the red area. I said that it would drop. It came straight to the green. I said it'll close, it'll go through this green area and come to this area. Now let's see if the pending orders we've placed here are going to work. So 30-minute candle is closing bearish. Yeah, it's closing bearish. 15 1-hour candle is closing straight down. 1-hour candle is closing in 3 minutes. That's one massive candle, 200 plus pip candle. So price did push up from here again the last time. That's what I'm hoping for price to do again. just about there. Slow is 8177. You should break. You should come down. Should come down further. Should have a clean drop, a very quick drop of about 20 pips straight down. Yeah, okay, that's our first entry. Now, since price did come there, I'm going to get rid of this box there, move this. This is a demand zone that we are now reacting to. Yeah, so should have about a 20 pip drop, a quick drop now. And let's see if this gets activated. So this is the wick that we're anticipating, that there is still some buying, there is some buying volume there to push price back up, maybe to this resistance area. Right? Let's see how the M15 candle closes. Depending on the M15 candle, how it closes, I'll draw the fib. But this is where it is. It shouldn't break this low, this wick low. If it breaks this low, then the setup is invalid, right? And I'm going to close our trade. But I'm going to try to manage risk. If price comes further down, I need to manage risk. Right now, I can't manage risk because all I have is a wick to work with. One just M15 wick, right? So I need M15 candles to close inside to be able to manage risk. Clear? Okay, I want price to ideally come to this wick here. This wick, that's the wick that I want price to kind of come to. Yeah, it's about 20 pips from down now. We might push up. We might push up. 56, yeah. Okay, 52 pips. That's where I'm expecting just to kind of go. Okay, so partial positions have closed on this trade already at 20 pips. So I'm expecting price to come up here. So I'm expecting price to come to 2644. 2644. Because that's our first area, right? The resistance. So it's a round number, the closest round number to that. So that's why I'm anticipating price to come to another 20 pips. So we did get a perfect reaction exactly where I had marked 263877. Perfect reaction. Price pushed up 33 pips already. Expecting it to come up about 52. I don't have just have one single position left. I mean, a tray on this position that can close. It can't close anymore because just one micro lot left. I've taken two micro lots. The reason I've taken two micro lots is because this zone is this is a very big zone. So I didn't want to take my full position right there, okay? Because if price did come deep in, I don't want to hold drawdown. So I divided my position into three and took at several intervals. I took the trade, right, with the same stop loss. That's how you manage your lot size. So you don't take a full position in a zone, in a big zone like this. This zone is about a 50 pip zone, right? That's too much for me. For some traders, a 50 pip zone is fine, but for me, that's too much, right? I like 25, 30 pip zones, 15 pip zones, so on. So this is too much of a zone, so I have to divide my lot size into three and take the trade, right? So this partial positions on this trade has already closed. So if this goes and hits my stop loss, then I've lost less on this first position than I intended to lose. My anticipation is for price to come up here. This is the first area of resistance right now, right? You can see how price reacted to it, to that area. So the closest round number to that is 2644. Just zoom in. The price already reacted once, so that is where I'm anticipating price to come. If it does come there, then this entire trade is going to close, and that's fine. That's a Monday for me. Okay. But if it does come deeper, then I'm going to hold this position. I'm not going to close it because half of the trade has already closed on it. So I'm not going to close anymore. I'll manage risk if you break here. Then I'll close this position. If you break an M15, if an M15 candle closes somewhere here and it breaks the low, maybe then I'll close this position. But I'm going to keep these two positions open because the idea is for price to reverse inside this and go back up. That's the idea, okay? Because that's how we have drawn our zones, and we had identified these as a high liquidity zone. So that's the anticipation for price to go back up. So we're coming quite close to this, about 12 pips away from this TP. Price is pushing up. Yeah, that's a Monday. So what we did today, I'll just go to the H4 chart. What we did today, I hope, was very clear. Yeah, we're just about to hit this TP level. We're about 3 pips away. What we did today, I hope it was very clear. I drew the zones. I had to go down to the 1 hour time frame to be able to see a zone here because it's not visible on the 4 hour. So if you go back, watch the first 30 minutes, it's very clear how I drew these supply zones at the top and these demand zones. After I did that, I identified which ones are high liquidity zones and which ones are not, right? That too was done after. So if you watch the first 30 minutes, you'll clearly see which ones are high liquidity zones and which ones are not. Then the third thing that I did was inside those dark red rectangles of the supply zones and the dark green areas of the demand zones, I identified liquidity candles, right, on the M15, on the M5, right? Ideally on the M15 or M5 or even on the M30, identified liquidity candles. And then I marked that area with a lighter red box or a pink box, right? And I said that I'm going to wait at those areas for price to come to. Same with demand. I drew a lighter green area and waited there for price to come to. And that's so price did not come to the supply area, but it did come exactly to the green area that we had marked. And we went and we hit our TP and we got about 52 pips on that trade and we're done, right? So I was going to manage this trade. If price had come further down here, I would have managed it. So maybe at about 22, 23 pips, I would have closed the trade if it came further down here. But we got a good 52 pips on that trade, and that's done. Right now, if price continues to close above here, then we're going to the next resistance. If we close above here, we're going to the next resistance, so on and so forth. Okay, that's how it works. I hope it was clear. That was the session, right? Sorry. Right. So this is the purpose of the stream. The reason I put this up is because I don't want to keep this as the mission. and I don't want anybody to get distracted or get confused by watching the streams. I've got a few questions last week. Um, Even though I try to make it as simple as possible with this slide, uh, still there are many who are confused and don't understand what these streams are about. It's very simple. I can't make it any more simpler than this, right? But there are those who don't want to watch the entire stream. They just watch bits and pieces of it, and they come up with their own conclusions. So there isn't anything that I can do about that. But I can try, for those who are really keen on learning how price moves, to them I can offer value. To them I can offer good, valuable, free education, right? So the purpose of these streams are to learn how to draw supply demand zones correctly, which is what we did. So if you watch the first 30 minutes of the stream, you will see how I drew the supply demand zones, right? Very clearly. You'll see them how I drew those zones. It was not clear on the 4 hours. I had to go down to the 1 hour. Sometimes I had to go down to the M30 to be able to draw them correctly, accurately, right? So that's the first thing that we did. Then second, I identified high liquidity zones. So out of those supply demand zones that I drew, I identified high liquidity zones. High liquidity zones are areas that I personally believe, holds liquidity to either reverse price or for price to react, to see some sort of a reaction, right? To get some sort of reaction. That reaction can be 30, 40, 50, 60, or even 100 pips, or even more, right? Or it could be a reversal. But the whole idea is to wait for price to get to those high liquidity zones to look for a possible trade. Because I believe that at those high liquidity zones, you will get a low risk, high reward, high probability trade at those high liquidity zones, right? So that's the second thing that I did. The third thing that I did was I drew support resistance levels. Now, sorry, before this, before I did number three, I also explained what price had done in the Asia, what price had done for the day, right? Now I do that. I have not put that on the slide, but I do that every day just to add some additional kind of value, right, for those who are interested to understand how price moves, right? So we said this is where the market opened. Then we identified the Asian low, the Asian low, the Asian high, the London low, the London high, what price did in the London session, how it closed above and came all the way up, and then how New York session price opened and closed back below the London high, and I said if it closes below the London high, we are coming to the London low, and that's exactly what price did. So this was the London high. If you go watch the first 45 minutes of the stream, you will see that very clearly. This was the London high. I said if a candle closes, a 5-minute candle closes below this, or a 15-minute candle closes below this London high, we are coming to the London low, right? So these are all. So once you understand how to read price for the day, you can anticipate the next move. It's very easy. That is the purpose of this, right? This is not to show gains. This is not to how to double your account, how to compound. This is not about that. This is how to read price, how to read the market. Once you learn how to read price, then you can anticipate the next move with a fairly high probability, right? So these are all possible trades to take. Now these, you can make your trade plan however you want once you learn how to read price. You don't have to follow the trade plan that I do here with every session, the one that I take, the trade plan that I follow. You don't have to follow that. Once you learn how to read price correctly, you can formulate a trade plan that suits your risk appetite, that suits your trading hours, your time, all of that, right? So I said if a 5-minute candle closes below the London high, right, which it did here, that was the London high, this candle closed below. I said we're coming straight down to the London low, and that's exactly what we did. That's a 165 pip drop, right? And then I said once you break the London low, we're coming to the demand zone below, right? So if you watch the first 45 minutes, all of this was said. All of this was said very clearly, right? Then the next thing I did was I drew support resistance levels correctly. That's very important, how to draw them correctly, right? And I drew them on the 15-minute, and I said, if you draw them correctly, you will see them work on the 1 hour, on the third, you will see them work on at least 3 consecutive time frames. So and that's exactly what you can see. You can see them work. This is on the 1 hour. You can see how perfectly it's drawn, that it works on all these time frames. Okay, if you go down to the 15, if you go down to the 5, they work. And then what did I say? If it closes below these support, 5-minute candles close below these support levels, they'll come to the next. If it closes below that, then it'll come to the next. If it closes below that, it'll come to this green zone. That's exactly what it did. And I said when it's going up, the same thing. If it closes above 1, I just said that. If it closes above here, we go to the next. And that's what it did. We close above here, or we close above 2650, we go to the next. Right? Now, unfortunately, I didn't have any position of my trade left to take out a position here, right? Because this was the next stop. This was the next area for a TP, 2648, right? That's the next round number that is close to the next resistance, right? That one. So that was the next TP level. So this would have been TP1, this would have been TP2, 40 pips higher. But I didn't have any position left, okay? So I had to close out everything here. Instead of maybe getting about almost 100 pip move, I got only about 52 pips on that move. That's fine, okay? And the reason for that I explained as well, why I took such a small position, because this zone is much larger than I'm used to. This is a 50 pip zone. I don't like that bigger zones, okay? I'm comfortable with a 30 pip zone, a 35 pip zone, or lower, right? The smaller the better, okay? So that's exactly what price did. So we came now what's happened? We've come to the London low, right? Now if we've created a new low here. If we close back above the London low, right? A 15-minute candle closes back above the London low, then and the next candle breaks the high, we are very likely back to go to the pre-NY highs here again, right? And then maybe even higher. That's possible. But an M15 candle needs to close above the London low plus above this support, this resistance, sorry, this resistance that we've drawn right here, right? Let me get rid of these. I don't want to confuse anybody. So this was the London low here. If a M15 candle closes above this and closes above this resistance right here, and the next candle pulls back, then should break the high, then we're going back up here. We're going back up to supply, right? So once you understand what price has done, there is a better chance of predicting what price will do in your session. Okay, and that's exactly what's happened. The 15-minute candle now is closing above this. So the next one, so now we're going to close. Yeah, we closed above this support, we closed above this resistance, we closed above this resistance. So we are pushing up and we're coming back here. We're coming straight back up here. Okay. All right. That's it. I'm not going to be looking to take any more trades. That was one trading opportunity that worked exactly as I had planned. And that's it. That's the end of it's a Monday. I'm not looking to do anything crazy today. But I hope that this stream was of value. That, like I always say, if these streams can help one person get better at trading, my job is done. That's all I want to do. Because I know that if 100 people watch this stream, only maybe 1 to 3 people will really grasp the essence of it and the value or the value of what's been said, right? The essence of it, right? We'll be able to read between my lines. We'll be able to understand how price moves. We'll watch it over and over again, and the other 97 are not going to understand anything. That's a fact. Those are the numbers. That is why there are such low numbers when it comes to retail traders being profitable. Right? Okay, so I'm not trying to put down anybody, but I'm saying it just takes a lot of effort on your part, a lot of effort, a lot of dedication to be able to find answers yourself to questions, right? So to watch these streams, you have questions, Find them yourself. That's the process of learning, right? That's the process of getting understanding, right? Understanding comes with you putting in time and effort behind something. It's not going to, you can't buy understanding somewhere. It doesn't, you can't purchase it. You can't purchase it with a course. Understanding does not come, with a course. Nobody can sell understanding. Understanding comes with your effort, the amount of time and the effort that you put into, and the hunger that you have to learn uh, how price moves on a chart, right? That can only you can get understanding with your effort. I can only give the knowledge. I can't give you understanding. So that is why the numbers are so low. That is why only 1 to 3 people out of 100 will figure it out, and the rest it'll just probably go over their head. Okay, um, it's a fact. Those are the numbers. I've been doing this for a very long time. I've been teaching for a very long time, so I know I've got a few groups that I teach in, and I see that over the years. I see the ones who are successful, I see the ones who are not, and I see the difference that the ones who are successful did and how they became successful, and the ones who are not successful, what they don't do. Okay, there's a difference in the ones for the ones who become successful. They do a few more things differently than the ones who didn't. Um, okay, okay, that's going to be the end of the stream. Been here for a short time, just for about an hour and 45 minutes. I'm not going to stay here for any longer. I'm going to delete these. Sorry, I'm going to delete these pending orders right here. Okay, so price has closed above. We are coming. We should come all the way up here. Okay, that is what I'm predicting right now. The price should come up another 70, 80 pips, come up here, take out these highs, and maybe go higher, come deeper into this light red box. If it does come deeper, uh, there might be a trading opportunity for whoever's at the charts. I'm not going to be at the charts. It's a Monday. I'm done for the day. I'll be back tomorrow, same time, and we'll go through the exact same steps, right? This is what we're going to do. We're going to draw supply demand zones. We're going to identify high liquidity zones. We're going to draw support resistance levels correctly. Also, in between that, I'm going to show you guys what price has done, right? So what it's done in the Asian, what it's done in the London, and what it possibly can do in the New York session. And then if I do get in on a trade, and I do have drawdown, I'm going to show you how to manage risk when you're getting drawdown, right? That's as important as everything else. All four of these are equally important. This is not in any particular order. They're all equally important to each other, right? Because all four of them will lead to one of these two results, and both of these two are the right result. You will either, if you have a win, you'll have a low risk, high reward, high probability trade like I did today. If you have a loss, you will lose less than your plan. You will lose less than your planned loss if you learn how to manage risk. Okay. All right. Thank you. See you guys tomorrow.